Afternoon, folks. Sorry for my tardiness. OBS was acting up, so hopefully they won't cause any more issues while we're studying live. Sorry I have to put these types of things in here because a lot of people out there don't take my video and upload it to their social media and pretend it's them, and you know the business. All right, so we're gonna check Twitter and make sure you guys can hear me. If you are a follower on my Twitter account, just give me a 5x5 if you can hear me, and if the chart is on NASDAQ September contract 15-minute. But I just saw somebody tweet saying it's a 60-second lag. Not sure why. I have it set to the lowest one, so not that it really matters because you shouldn't be trading this today. But I just saw somebody tweet. Yeah, it is a bit of a lag, isn't it? I'm going to send you a picture, that way you can see I do in fact have it set to the lowest latency. I know there's a lot of folks out there that like to make excuses for this, that, and the other thing, but here's your proof that it's set to the lowest ultra low latency. But for whatever reason, it's getting there slowly today. So it's not for a lack of trying, I promise you. So anyway, let's get over here to the chart. Make sure my phone's set to do not disturb. Goobers like to try to call me. All right, so here is the NASDAQ 15-minute time frame, and I'm going to go up to a daily just for a second. And then it meanders around at 2:30. It starts the real move. Okay, so it's not always like that. There's some times where it'll move and then move even more in the same direction. And other instances, but very much more rare, is where there'll be an initial move at 2 o'clock and then it just consolidates after a bunch of little whipsaw movement at 2:30. So that's why it's very important that you understand that anything that I comment today, please don't use it as a secret handshake that I'm trying to tell you to buy or sell, because that's not what we're doing here today. But I want you to observe how the market reaches for liquidity, how it behaves afterwards. And if this is the first time you ever watched something like this live, it'll be probably very obvious why you shouldn't try to trade ahead of it. I will toggle back and forth between ES and NASDAQ. I know some of you don't have access to those markets. You have to trade the CFDs. For my focus and for brevity's sake, I'm going to focus here. Everything that you would see in hindsight later on, compare and contrast the charts. That way you can see how both delivered on the basis of this event at 2 o'clock and then 2:30. All right, so we have liquidity here. We've already hit the liquidity this morning. You watched me do an execution on that. There are relative equal highs here. That is a lot to get back up to, but stranger things have happened on days like this. So I want to go right into the 15-minute time frame. And I mentioned this morning that the 640 level was too clean right in here, and that's what I would like to see happen. Does it mean that's what I think is going to happen and it's going to therefore be a trade idea for you to take? No. I might get it wrong. Just like a CPI, you've watched me do, I think, 2 times where I've talked about CPI number ahead of time, what I thought was going to happen, and it was completely diametrically opposed after the news hit the marketplace, and it just rolled aggressively the other direction, which is, again, that's a freight train. You don't want to stand in front of it. This is like a gambling. It's a gambling session. You don't know where it's going to go. I don't know where it's going to go. And the fact that you're not going to be able to get in and get out because brokers pull the liquidity. So it's not an absence of wanting to be a buyer or seller. It just means that they are doing their best to try to protect themselves, because a lot of you out there get heavy-handed with your bets, and sometimes you can get real lucky. And they don't want to expose themselves to that type of risk. All right, so just 30 seconds to go, and then we'll see the first stage of the Fed event today. So the 2 reactive points is 15,640 and 15,483. Those are the 2 price points I'm monitoring, and what I want to see is how they react after trading to either one. And I don't care really which one it goes to, because I'm not pushing the button, but I want you to see how fast it moves. Of the 2 o'clock, which is here. So that means this here. And then I would look for it to run to that level, and then best case scenario would be run for that 640, which was my interest this morning on Twitter. If it would have ran, and it still could, but if it runs for the 15,640 level, then I would look for at 230, does it show a willingness to reject that entire move and run for the lows here and maybe gravitate towards this? Not that it wants to go here or would likely go there. We just are looking for a range to trade and an opinion. Okay, we're trying to ascertain the most likely draw on liquidity, and right now it's indecisive. It's not really giving us a whole lot to work with. At least it's not for me. I like the fact that we went up into this sell side imbalance, buy side inefficiency. We overlapped this volume imbalance at 2 separated bodies here. If it rejects all this and runs lower, then that scenario that I'm looking for at 230 might still be in contention, but right now there's simply not enough to go on. Now I can imagine some of you that are relatively new, maybe you're used to watching Instagram guys talk about stuff that didn't happen. And you're wondering why. Well, why don't you trade in this? Why wouldn't you want to be a part of this? It's going to be a big mover. The likelihood of you getting a good fill, number 1, is unlikely. 2, the risks far outweigh the potential reward. You can easily hurt yourself. And I've done that to myself on days like this, trying to be a cowboy, over leveraging and trying to do things that thick feeling. You think, okay, well, it should have stopped me out, and it just keeps rolling way past your stop loss. That's the risks. That's all part of that CFTC required disclaimer. That people that talk about the marketplace, people that sell services or give signals or just even comment about the market. If you read those disclaimers, it talks about these very scenarios where there may not be an opportunity for you to get a fill. And it's not good when you're in a trade and it's going against you. There's nothing that you can do to fix it or remedy it. Okay, so I like the idea that we've taken these relative equal lows out here. We swept the rejection block here. If you look at the closing price on that candle, that's this up here, upper left-hand corner. That closing price comes in at 15,535 and 3/4, and the low one handle less. So we went below that. It's staved off any lower prices initially here. I'm going to see, do we treat this here as a breaker? So we're going to be watching this right in here. Does it show sensitivity and want to trade above this high right there? If it does that, then we want to measure how much animation, how much energy, how much interest does price want to show towards going into that 640 level. Now the worst case scenario is if we don't break this high here and we don't break this low and it's like 215, 8 more minutes or so, then the real move is going to be 230 and it's going to be a freight train, and who knows where it's going to go. So that's why it's important that you understand that this event is 2 stages, and it's imperative that you can at least try to figure out what the initial run was. And right here it's either or. It's 50-50. So 50-50 is not a scenario that I want to go out there and push a button on. I don't even want to give you a bias on that because it's not clear. So one of the things that my students that have been with me a long time, they know that I know what I'm looking for. When it's there, I'm in the chart, I'm all over it like white on rice. But if it's not, I'm sitting still. And you have to be comfortable with that. And that's a skill set that you should be trying to acquire, knowing when to sit still, knowing that, okay, the price might move around, it might move a lot, but if you are not in it, that's not a losing trade. But to a neophyte, someone that's new, someone that has just got into this industry or watched other people that may not be actually doing anything, their advice or their opinion about something or showing maybe fraudulent results, you might subscribe to their views on you should be trading on a day like this, or you should already be in a position already. And I'm not a proponent of that. I don't like that. I think that it's irresponsible and it fosters the wrong mindset about managing risk, which is what this whole industry is about. It's not about making money. It's about making sure to broke that high. I want to see speed above this high right here. Usually when I'm doing an execution, this is when I'll type in, I want to see large up close candles or large green candles incoming, something to that effect, once we get into this area here. The reason why is because I suspect that this area here is going to be used as a kind of like rocket fuel. That's what I would kind of like reach for in terms of an analogy. They're going to use this area here to really speed up and run to 15,640. That would be my understanding and my expectation. But if it fails to do that very thing there, that means we're going to probably hang around inside the range between the high it forms here and the low here until we get to 230, which is not helpful. Now you might say, well, you know, what's the point of all this? And a new student or a new trader would think that. You know, what's the point of all this if you're going to watch this and not do anything? Well, I'm teaching students that have never done this before, or they don't have a skill set where they can trust how to read price action. What is it you're looking for, ICT? What garners your interest in a specific price run to a high or low, or buy side or sell side? What would negate a specific idea that you may like initially, but would cancels it, what makes it null and void. That's what I'm teaching you, and that stuff is not transferable knowledge in a book. Okay, so the things that I'm not going to be able to include in my books, I'm teaching you in live market settings, whether it be through tweets, calling the market, or doing live sessions, or doing things over recorded execution and explaining to you why I'm doing what I'm doing and not other things. Now, what I'm looking at here, my interest is, let me get this shameless advertising. You like that? This range right there, that SIBI, I'm cutting through all of this and my eyes going right into here. I don't want to see any respect of this range high. So this should be a balanced price range. Not in an event where we're reaching for liquidity, and it's also an unsettling, which is the whole premise behind rate announcements. It's the same reason that they would use CPI numbers, same reason why they would do non-farm payroll. Okay, it's a disruptor. It's a it's very point of existence is to disrupt the existing order flow. That means that everybody that's been going lower this morning, that's been profiting, their stop losses are above relative equal highs or short-term highs. So that's a buy-side liquidity pool. I'm not interested in seeing this as a balanced price range because my interest is up here. I think that these individuals think that they're safe, and I always look at the marketplace with that mindset. You know, who has been making money? Where would they be scared? What would make them scared? And what would take them out of the marketplace? And why would their stop loss be helpful to someone else? And that's narrative. Okay, that's things that help the trader form and develop an idea about why the market should even go where you think it may go. You can't just look at price action on the basis of a pattern or a Fibonacci ratio or something harmonic or anything, and you can't look at a depth of market just because there's a number of orders around a specific, high or low level relative to the current market price. That's not enough to just, I guess it is enough for somebody to form an opinion based on that, but that's, to me, it's too myopic. It's limited in its underlying basis. So there has to be more to why the market should go higher, not just simply, even for my stuff, just because there's a down close candle and the market has, shifted above a short-term high and it came back down to that down close candle, unless the narrative is suggesting that the market's going to go to some buy-side liquidity pool or some premium inefficiency above the market price, that's not going to work. And that's what I see a lot of by individuals out there trying to teach order block theory, because they think it's supply and demand. So they're taking the facts that just because there may be a rectangle on my chart or I'm drawing a special attention to a specific candle, they will add in that they'll go through candles because that's what supply and demand says you're not supposed to do that. You're supposed to look at a fresh zone. There has to be some underlying reason for the market to go to either reprice to inefficiency above or below the marketplace or trade to stops above or below the marketplace. They're the only two things that can happen, or it consolidates. That's it. Anything outside of that is manipulation. It's manual intervention. These days, like non-farm payroll, today, the Fed announcement, whether they're going to raise interest rates or lower them or leave them unchanged, you don't know what they're going to do. There's people out there that already know what they're going to make public. But I'm not going to stick my neck out there on the block in front of these types of events, because I know what their tendencies are, which is they're traps. They can entice you to do something that, if you came into the market, like I have no bias except for the scenarios I've painted for you here. So it's limited to two ranges of liquidity, the 640 and the 483. And I'm not convinced one way or the other because we haven't overrun this here. I'm not subscribing that this is a balanced price range either, because the reasons why is because we have a looming conference where the jawboning by the Fed will need to be behind us, and then the market will be permitted to move around. But right now, what's actually occurring at this very moment is everyone that's in an interesting party in trying to trade this asset, they're trying to determine whether it's going to go higher or lower, and they're placing bets right now. They're entering, they're buying and selling, and they're going to have a great deal of regret here. Come 3 o'clock, they're going to wish they didn't push the button yet. They're going to wish they just turned off their charts, didn't do anything today, because it's going to do probably very much opposite to what they were expecting. And the unfortunate thing is if you're inexperienced and you get into a move and it starts to run in your favor on a day like this, you marry the vein, meaning you fall in love, you marry that position, and you will ignore every warning sign that it's either run its course, it's done, or it's about to reverse on you. Because greed, you'll see it move really, really fast. And if you're on side in the initial stages of a price run, it makes you feel like, wow, it's going to really go. It's going to really, really run. And you won't, and it didn't happen. And they'll tell you that you should be in here trying to trade on these days. And that to me is the sure sign that they are absolutely not risking real money, and they are absolutely not in position to give anybody advice with trading or financial advice. So I try to be very responsible as a mentor, as an influencer, and I want my influence to end come November. So I know things are going to get wild here globally, and I don't want to have any reason to feel like I've either inspired or led someone down, an incorrect perception of where price should go when it starts getting nuts. I will be trading, but I won't be doing things like this come November. The YouTube channel content will remain up there. My Twitter account will remain up. I have never deleted any tweets. Everything will remain. I won't be active. My attention will be diverted to my personal life and my family and my own trading. So we are about 6.5 minutes away from the real move, and that's really what we're here for. I just like to have the opportunity to sit down with you, calm you down, because I know a lot of you are hopped up on goofballs. You're like, man, he's doing a live stream. I'm going to take his advice, and whatever he talks about, I'm going to trade on that. You shouldn't be doing that today. So I've outlined what interests I have in the marketplace, the buy side, which I've made known, and right now with the market structure that's in place at the very moment we're looking at it right now, I still favor a run for 640. If I was to have like a gun to my head and say, okay, ICT, right now, you call it. What do you think is going to happen? I believe that they're going to run for 640. If I'm wrong, the only thing I lose is, I called a move that I would have never taken with live money anyway. But based on where I had to pay more money for a better perspective. So I don't look at losing trades like I lost, my model's inferior now, or it's obsolete. Too many people don't understand what the algorithm's doing, so now it's changing. That's not going to happen. More people learning how to do this isn't going to do anything except for create more liquidity. That's all it's going to do. There's going to be a lot of people out there that don't know what they're doing. Like I was mentioning earlier, down close candles doesn't make it a bullish order block. Now where we're at here, I'm watching the consequent encroachment, which is the midpoint of this wick right in here. So that right there. I'm watching, do we show willingness to expand a lot of momentum running past that, or is it just fluttering around there and start drawing back up into that candle? We're getting close to that 230, so there's going to be a lot of whipsawing. I'm going to take this line off here. Okay, I don't want you to be confused, and it's also pissing me off because it's in my way when I'm looking at everything. So I'm going to take this line off because it's already been used this morning. And you can watch the live execution in the Twitter feed that I posted this morning. Okay, you see how it just reacted off that right there? That in itself, on a 15 or 5-second chart, that would be a trade I would have taken on another day, not today, on another day where there isn't this looming big injection of volatility. But look how much it's pulled off of that. That's bigger than most of the guys you watch live stream. You know, their big moves. It's not even 1/4 of that. And you just watch that happen, just, you know, one candle in one 5-minute candle. So we're about a minute and a half about fundamental drivers controlling price on the day of the event. I think it's a matter of who can get hurt easiest, and here we're about to see it begin in 3 seconds. So this is the window of time that your focus should be at the highest, not being distracted with your spouse, your children. Mind your children, by the way, but you don't let your attention be diluted, because this is where the real move will form. So we've had an initial run. Now, if we were looking at it like this, so okay, here's 2 o'clock, right there. Okay, so what is the much more obvious run? Did it go down a lot, or did it go up and reach further for buy side than it did sell side? It looks to me like they set this run up for the stops here. If everything is true based on what I've seen in the past for a number of years, this should erode below here and reach for this down here. That's what I would expect. Now, if everything goes against what I just outlined, it would need to completely run entirely over top of this range here. If it does, I would expect it to come back down in and find that as support, and then it's going to go much higher than this. That's what I would expect. But right now, based on the fact that we waited until 2:30, it's 2:31 now. The run was here, so this is a much larger run than just a little drop down here below here. So if it's a 2-stage development and delivery and price, they ran for the trailed buy stops, and I want to see, does it show a willingness to get down below here? And if it does, I'd be looking for the 483 level. What changes it, what negates that idea, is it has to run over top of all this shaded area here and then come back down and find some support. If it does, then, like I said, it would be a much more bullish idea than I would have expected, you know, at the beginning of the day. And what you do, he likes to talk a lot. I don't know what he's saying. I could care less what he's saying. I don't have the aptitude to, you know, follow along and make any sense out of whatever that he's saying, because I think it's all bullshit, basically. It's not moving because he's talking. They're just using the fact that he's talking because he's a puppet, and he's the focus point. Okay, he's like the thing. He's the right hand of the magician, and you're watching him where the sleight of hand's being done on the left hand, and you never see it coming. I guess you shouldn't say never see it coming. One of the other things I like to do on non-farm payroll Fridays when I'm studying price or events like this, I like to put myself in a position where if I was in a trade, long or short, at what point would I feel that discomfort? And whether you're trading with a demo in the learning early stages of your development, or if you get to the point where you're trading with real money, um, this is those days where guys will tweet to me. Let's say, here's a trade I took, but they're not telling me right now on Twitter that they're doing it. So if you're going to do that, if you have it in mind, tell me right now. Otherwise, I'm not going to pay any attention to your tweets. Ooh, that looks good. Let me see the Dow. Mm-hmm. Okay, so we have breached that SIBI. Now we're going to drop down into a 1 minute chart and study everything in here, okay? Now one of the setups that I like, and it may not form because it's a little over, oh, it might do it now. When it trades to here, the top of that range, and it opens up the next candle, it could trade down and touch the high of that candle there, and then I would expect it to run really fast up into the 640 buy side and expand through. If it trades at the 640 or higher, I would not be interested in seeing this as support. Not that it can't do it later on. I just would not want, and it looks like we're going to rip through it. Now, if it were to not do that, I was going to above here and then come back down. I think that this is just a target, and we're going to keep going into the close. I'm checking. Here's the 335 London session buy side just tagged. I want to see a little bit more run through than that. I'm seeing some tweets. Guys are saying that it's buffering and the audio's breaking up. I can't do anything about that, folks. I have high speed internet. I'm not having any issues with my delivery of a signal. I'm talking to you on an expensive microphone. Like it's all YouTube, so I can't do anything about it. Okay, go back into this candle here. I mentioned when we were trading down it, I wanted to see, do we have a willingness to hit that and reject it? It's consequent encouragement. I'll show you the actual measurements on that. So the 50% level or consequent encouragement of this tail on that candlestick comes in at 15,545 and 3/4. The low, and you're going to look up here, upper left hand corner. The low on that candle comes in at 15,545 and 1/4. So it went 1/2 of a point or 2 ticks beyond that, and then sharply rejected right over top of this. The only thing it didn't really do that I would have expected and would have enjoyed seeing was on a 1 minute basis come back down and touch. Let me go down to 1 minute chart. I would have liked to see it have a touch of that right, that level there, and then deliver like it's doing here. That would have been a nice 60 points. So I'm looking at the likelihood that this will want to go higher into, not yet, traded above this high here. Then I would look at overnight London going into New York and tomorrow's trading. This would be the draw on trading tomorrow. So I would have a bullish bias going into that. And the only thing that would change that is going below this balanced price range that's on the 5 minute chart. So that's what I do with this information, even though I'm not willing to take the trade on a day like this because it's a big gamble, and I'm more interested in the information that it provides me after it's already in price, because my interest is really on the Thursday and Friday's action to trade that. I use this information here to try to like help me frame a bias, give me context as to what I would like to show as a parameter in my analysis. Where would I be incorrect in assuming that it's going to go higher or lower? That's why I study it. Even if I'm not talking about it live on Twitter, I'm always watching these big events. And I'm looking at it with the same perspective I'm showing you here today, where I'm measuring things. I'm looking at, does it have a willingness to want to go to a specific level? Does it do certain things that I would like to see? Or if it doesn't do that, what does that help me conclude in terms of useful information for tomorrow's trading and or Friday's trading? And to a myopic new trader or someone that just starts, or a inexperienced mentor, they'll be out here trying to promote the idea that you should have been a part of that move, and you might get lucky. You might be able to do something with that. But if I'm in a position like I'm in, and if I say I'm going to do something, or I'm interested in doing something, I know there's at least 15% of you are going to go out there and try to do something with real money or your funded account, and you're not going to know how to navigate it. You're going to not really enter at the right time, and you're going to open up yourself to a adverse result, and that's going to really get used. But I'm finding the right ones because it's my stuff. That's authorship. But the things that I'm teaching you to focus on helps you frame narrative, why you should trust these concepts at specific times and not lean on them at others, when everybody else will look at it and think it's a down closed candle, it's a fair value gap, it's a trade, it's something to get into, and it's not. So it's hidden in plain sight. That's the beauty of it, and that's like the easiest, straightforward answer I can give to people that are afraid that more people will learn it. Look, everybody that's ever rode a motorcycle, it doesn't mean they're going to go out there and keep up and run with those individuals that can run around that track, like professionals, speed demons. And just because you drive your car doesn't mean you could be a good NASCAR driver. And it means that you're familiar with a motorcycle if you've driven one. You're familiar with your car. That familiarity isn't going to be transferable, useful information to a NASCAR or a sport bike. there's a big chasm between someone looking at a video or watching me talk about something and then actually going out and doing it. There's a great deal of learning that has to take place, and they will be a barrier to themselves. So I've never been afraid of teaching it because more people are going to learn how to do it and it's going to change. No, I've been afraid to teach what I know because I'm not supposed to teach that. So I created this language to talk in this language, and this is where I'm safe. So I'm going to hang around till about 3:15, then I'm going to close it. Folks, I get it. I don't need 30 people to tell me that the video, audio, and such is breaking up. If you look at other people tweeting to me, doesn't quite have what I would want to see going into 3 o'clock. and see if there's any interest in the top of that shaded area here. All right, we're at 3 o'clock now, final hour New York PM session trading. Take note where the bodies of the candles are. Looks heavy. All right, so we hit the SIBI. Got close to it on this candle, didn't quite get to it. Hit it here. Now, do we get any kind of insight from that? Does it want to show some support? Does it want to take out this swing high here? Or does it just erode into that? Going through this again to the downside is very, very, very bearish. As long as we find support here and it doesn't go through it, if we take out this swing high here, then we would most likely try to gravitate back up in here and run on anybody that's trying to sell short. It would need to do that though by 3:45 for me to like it. Okay, see what it's doing there? Anything bullish, we would not want to see that at all. So we've cleared 640. Now 483 is the draw for today, going into the close. Remember, up here we were interested in 640 this morning. They were too smooth. So if smart money used that liquidity in the form of buy side and they are short, where's their best exits? Below. I'd like to see this area up here stay open. I want to see if it's sensitive in here and touching this over here. So this, if it wants this 15,483 and 3/4, if it wants that level going into close, I would want to see this shaded area here treated as a balanced price range. I measured this range here in the event that we had a retrace up into it. Anything at the 50% would have been good or less for a short. It didn't even get up there, so that to me is indicative that it's probably going to be really weak going into the close. Into this, at least take out this short-term high there and then reject and go lower and aim for that 15,483. If it doesn't even go back up into here, that's really weak. So I wouldn't want to see anything on a closing basis above the midpoint of that blue shaded area. It's already spent too much time in this area for my liking. We ran for one side of the liquidity I mentioned, but I was interested in seeing that 483 level give up the ghost. That would have been both our pools of liquidity swept. "35 minutes or so after 3. So now I'm determining what we'll run for on market on close macro. I don't think we're going to make a higher high, and I don't want to see it trade above halfway of this shaded area here. So either we consolidate, which is uneventful, or we eventually come out of this aggressively and run for this sell side here. Remember what I was asking price to show over here? Look and see if it'll offer it here at the top of that range. It's an old VISI. I'm sorry, old SIBI rather. SIBI. Sell side imbalance, buy side inefficiency. I can't get a read on what it wants to do here. A lot of manipulation. Hence the reason why I tell you don't trade these days. I measured the high to this range here. It's not your song. It's hard to keep the rhythm and just a really crummy Fed day. I thought we'd get a lot more momentum and movement around here today, but it's not doing so. Just hanging around. So I'm gonna have to see what we do tomorrow morning. I will be trading tomorrow, but I don't have what I was hoping for, which will be a real nice heavy bias where I could see it wants to do this or that. I wanted to close the video with this is what I'm going to be doing tomorrow, so that way we can watch and see how I framed it on this, and then use the executions and such tomorrow. But I don't have anything here to hang my hat on yet. Must be the UFO discussion today took all the steam out. Everybody's watching the UFO disclosure. I realize there's some audio stuff. I know you guys are still tweeting to me telling me there's something wrong with the audio. It keeps buffering and it's bad. I can't do anything about that. I have high-end equipment. I'm using YouTube. YouTube's doing whatever they got to do with it. If it comes to you, in a substandard manner, that's not my doing. I'm doing everything I can on my end. Now, let me close it with this. What keeps me from trading on a day like this? The things I pointed to here, these are all things that I would expect to see in a market that's not being manipulated. It's not being pushed around artificially. So all this is intervention. It's going way beyond what would be reasonable, higher and lower. So when I point out things, okay, the cynics will say, see, it doesn't work. When the point is that days like this, I've already arrived at and taught you that this is where you're going to see a absence of precision. Otherwise, wouldn't I be out here trading it? Yes, but I'm not. This morning I did because there was something obvious right at the opening range, but that's it. The rest of the day, I would have taken that and to run to here and then get up, hopefully up in here. My best case scenario exit would have been up here, and a partial would have been right at that 640 level, even not 41. I would have been out at 40 at partial, and then my best case scenario here, neither of which would have been filled, and I would have had a stop out. So it's not a matter of trying to save face here. I'm not trying to paint something that would or wouldn't happen, and to make myself look good. The point is I'm showing you where the problems lie on days like this. So if you can identify it as a problem area where you're going to have friction, you don't want to have a slippery slope. It's already bad enough when you're first trying to learn how to do this. You don't want to compound the difficulty with a day where even the guy that comes, the things that I highlighted that I would like to see didn't materialize. So if I'm telling you as the educator, the mentor, the person that authored these concepts, if I tell you I don't trade on these days because my concepts don't hold up well in this particular environment, why should you go out there and gamble on it? The whole point is for you to understand that these days make it more complicated. So when I point out things, I want you to observe, does it respect those levels? Does it do this? Does it do that? No. Only a few things happened. Majority of it didn't. So when we get to another rate announcement day in the future, when I'm not doing this with you, when I'm not showing you anything, and you feel the impulse to want to go out here and try to gamble, remember this, because I'm not trying to do it. So you shouldn't try to do it. And it doesn't matter who comes later on in the day and tells you what they did and how much they did this and this and that and that thing. It doesn't matter. You can't spend their money. You can't spend their money, and they're not going to give it to you because they made it. So there's no point in even talking about it. Just know that this is a very, very tricky day, just like a non-farm payroll day. And the odds of you being successful in it are low. So you don't want to be trading in those environments. I would have liked to see this. If you look at yesterday's afternoon price action, I was with my son Cameron. I was literally all over NASDAQ. I beat it up pretty bad. And in the later part of the day, it did something very similar like it was doing here. And what I was wanting was, and I mentioned, I said, I want to see it trade up into this gap here, and I want to see it sell off and then reach for the sell side. It did very much that very thing yesterday, and I was waiting for a repeat scenario of the very thing that we saw yesterday and what I was anticipating here. It came all the way up almost to the very high of it, and it started to break down. And what I was watching was, does it have a willingness to get through this mean threshold, the half point of this down close candle? And it wasn't even able to do that. So that was problematic. And you watch me take away all the things here because I want to see, does it gravitate back up into the midpoint of this? Because if it does, I don't want to see it close above it. This here looked good initially, went down, but then this range started acting what? You're trading on probabilities. Many times you're hanging it all on a myth, some kind of animal pattern, some kind of indicator. And if I can't make rhyme or reason out of where they're going to draw to for inefficiency or liquidity, whether it be premium or discount, I'll be just like anybody else on a day like this, struggling, trying to find out where it's going to go because it's being controlled. It's being outside the scope of normal scripts. And it just does these types of things here. And you can sit here and wrestle like I've done for years when I was younger, try to figure it out. And I realized I don't need to do that. I don't need to figure that day out. I don't need to know what non-farm payroll is going to do. I don't care. Because I know I can find my models, plural, on all the other days of every single month. And I also know there's certain times of the year where seasonal tendencies are going to be more prone to deliver price in a much more magnificent manner. A lot of speed, a lot of distance. The magnitude of the moves will be much more pronounced. And I try to focus on those because I know that's where my edge is, that's where my advantages are, that's where my models shine, and the least amount of manipulation takes place. So you don't want to have the biggest defensive team go up against your trades, and you're asking to play in the Super Bowl with the team that has the best defense on a day that your quarterback has an injury. That's what it's like trading on these days. No matter what you have as a model, whatever you use, you're up against the individuals that roll this place. And there's no better way of me communicating to you than to sit out here live and explain to you what I personally would expect on a day that I would not expect my tools to shine. If this is your first live stream here, you're going to hear that and say, well, this is someone trying to save face. No, you don't know what I've said before, and my students will vouch for this. I've always said, don't try to trade on these days. Don't try to do it because precision will evade you. Look at that move. Look at that one. Right after 4 o'clock. Earnings. Sweet, sweet, sweet. Look at that. That's a nice rip. So, there you go. I stated that I didn't think back here they would see a higher high. We got one. So now, does that type of thing invite you to want to go out here and crack the code of this day? Does it make you want to go out there and try to figure out something that I admit there's better trading opportunities away from these days? And all you need is one good week out of a month, and it'll fix a lot of bad, smaller little errors. You only need one profitable day per week to do well and stop. You don't need to everyday trade. But when you come into this business and you're brand new and you listen to Instagram mindsets, people that don't really have understand what they're supposed to be doing, and they're influencing more than they're educating. You get wrapped up in that kind of stuff, and you think that trading is every day, always trying to do something, hyper active, and that's not what you should be thinking it is. It's like a sniper. They're not out there Tommy gunning, spraying all their bullets into the direction of their target. They're waiting for that one mark to walk into their crosshairs, and then they gently squeeze the trigger with the expectation that when they shoot, they know that that shot has to make an impact on the target, because when they shoot, the adversaries can triangulate and get a vector on where they're at. So they're exposing themselves. That's their risk. Their stop loss is their life, their soul leaving their body. You only get so many chances to get stopped out in that environment. And if you treat your trading like that, not that you should be making everything hinge on your trade being successful, but you should be thinking about the measure of risk like that. Not to be paralyzing you or create trader's paralysis, but you need to think about, like, would a sniper wear rainbow sweatpants and headband out there in the jungle getting ready to take down somebody? No. They're going to be camouflaged. They're going to be in amongst the natural setting. But they're not going to walk out there in no foliage. And when you're out here on days like this, you get like a spotlight shone on you. You can't hide and wait for your good shot. Because if you hurt yourself, just know that that's a learning lesson. Growth pains. Growing pains are never fun. The mistake I made, and some of you might make as well, is that you think you're going to figure it out and know what to do every time these days come. But you don't appreciate the magnitude of how much they're manipulated. Like, you have no idea. You will, over time watching it, you'll say, oh man, it wasn't obvious at the time, but now I can see it. Right now, this looks like you'll find 20 different retail things in here that you should have bought and sold from. That's because hindsight's 2020. You're going to see all kinds of things in here, even maybe I have taught. Oh yeah, I see a concept here, I see an overblock there. Unless you know the narrative, none of that stuff's going to work. None of it will work. And we're at the roulette table. And this is my last analogy. I'm going to close it because I need to get something to eat. We're all at the casino, and we're standing around the roulette table. And you have the bulls, they're betting on black. You have the bears, they're betting on red. And you think it's 50-50. You got a 50-50 chance. It's black or red. But you don't realize that the market makers are green. And when it's favorable for them to take both sides out, green's coming up. And they'll play green all day long on non-farm payroll. They'll play green on a rate announcement like this. It didn't move a lot. I mean, think about the total range here. Not in terms of where we have been in terms of volatility. Now, years ago, when I first started, this would have been ridiculous in terms of volatility. But this is nothing. in the grand scheme of things where we are now. And that was the first clue that we're not seeing a whole lot of movement here. Remember, I was telling you at 2 o'clock, I was like, it's kind of lame, actually. And at 2:30, we saw a run. It took the 640 buy side out. And then consolidated and go into 4 o'clock. We have one more pump and creates a higher high. And we're sitting around that 640 level now. So anyway, learn not to be interested in doing this as a live trading day. That's the main takeaway, okay? If you haven't at least took that and put that into your toolbox to say, don't tread here. Do that here. Do that today. Because I promise you, unless you heard this, unless you watched me try to do it today, you would have believed that I'm sitting around here running it up and down all day long on a day like this. And it's not like that on these types of days for me, which is exactly why I tell you don't touch them. I have other things I'm never going to teach you, and even those things are not helping me. There's no advantage on a day like this for me. None. I'm just like everyone else. They weren't being respected. That should not happen. If they fail, that means it's giving you a warning sign that you're offside or it's not performing like you want it to. Now, as a younger man when I was 20, I took that as, yeah, I'm just gonna get in there ahead of the. I'm gonna get in ahead of my signal. I know my signal will happen after I get in. The market will bend to my will, and that's many times what led to me blowing out an account. When you're new, you don't know that, and you try to ignore it like it's not going to happen to you, like you're going to be the exception to the rule. And I promise you, every single person that's ever hurt themselves trying to do something like that, it's the same way. You're not any different. I wasn't any different when it happened to me. You think that it's going to work for you, and you ignore even the smallest little inclination inside that you know that I probably shouldn't be doing this, but well, we went to the casino. We might as well bet it all. And you can't do that kind of stuff on days like this. You can't. Not and survive. Not do well. You'll have severe drawdown. You'll lose your funded accounts. You'll blow your combine. You'll go in severe drawdown with your live accounts or even blow them. Because you get emotional. You want to be right. You want to fix something. You did it wrong earlier. Now it seems obvious. No. Just don't touch it. Use the information after the fact. It's okay. I feel confident that we're going to go higher or lower. Which, let me take a quick look at this 15-minute chart. Look at that. It's nuts. That is really nuts. You know, if I were making the market for NASDAQ, okay, this is my last point and I'm closing it. I know I keep saying that, but I'm always over delivering. The idea of it trading where it did here, we went up into this area here. I personally would absolutely murder everything and go lower Thursday into Friday. I'm not saying that's what it's going to happen, but I wouldn't be surprised if that's what they do. How am I going to trade Thursday? I'm going to sleep through London. I'm going to get up tomorrow around 6:30 New York local time, and I'm going to identify where are my 15-minute pools of liquidity, just like I have this chart here. Right now, it's 15,739.25 level, or the 15,515 even, and therefore, if it goes lower than that, the 483.75 level. I am not confident right now to know which one. I wanted to know the way we closed today. I wanted to know what I could tell you what side I want. Like when I'm doing the analysis commentary, but yes, this is where I think it's going to draw to. I don't know. I'm torn between both of them. So whenever that happens, and it does happen in my analysis sometimes, students get frustrated because they want me to be able to know what it is all the time, and sometimes I don't. And you're not going to always either. And you have to grow comfortable with not knowing sometimes and just waiting for more information, more intel. That's all. And it cost me nothing today to sit out here and do this. It cost me no money. It cost me no emotion whatsoever. The only thing is I was hoping at the end of it I would know what I wanted to do beforehand, because I would tell you, okay, this is where we're going to draw to tomorrow, and then we would all watch it. I don't have that here. Nothing really shows me one side or the other better than the other, because they're just back and forth. I mean, this is a whole lot of nothing going on, and I'm not confident co-signing on one direction or the other. So the best I can do is explain to you how I'm going to treat it tomorrow. I'm not going to look at London. I'm not going to get up and see what London's doing. I'm going to wait until around 6:30, and I'll either get woke up from my children's mother, or I will wake up by a circadian alarm clock. I don't have an alarm per se. I know when I want to wake up, and then usually get up at that time. I sleep in like 4-hour cycles. So if I lay down, I'm going to get up between 3 hours and a half to 4 hours. And that's usually how I sleep like that. I do 2 of them and maybe a cat nap here or there whenever I can fit it. And I have plenty of rest. But based on these specific levels, what we're gravitating towards, I know that I'll probably get a 20 or 30 handle range of opportunity if I'm waking up ahead of 7 o'clock. Between 7 o'clock and 8:30, I'll look to see if there's something I can use to frame it. If not, then I'll wait at 8:30 to 10 o'clock. In that range between when the news embargo lifts and the opening range is complete, 9:30 till 10 o'clock. And then I'll do something with the silver bullet. But I already know I'm making money tomorrow. I already know that that's going to happen. But I know there is a chance that is much more significant of me losing on a day like this. So I have to respect that. I have to also identify my own limitations. You don't see that in the trading community. You don't see that on Twitter. You don't see that in Instagram, in Discord, and Facebook. You see go, 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 baby. And I think that is foolish. Like, you have to, but everybody has a weakness, and there's no shame in admitting what your weakness is. That's actually wisdom. That's wisdom. If you're a weight trainer and you know you can't bench press 500 pounds, why the hell are you going to try to crawl under those plates and try to do it? So you have to be responsible. You have to know where you're going to excel. Where's your edge? Where's your best trading conditions? But on the other side of that, by journaling, you learn by real data, real journaled experiences where you were there, it happened. What keeps repeating? On what type of scenario? What type of day? What are you trying to trade? What model are you trying to force, but maybe not be supportive with your, or compatible with your personality? These are very important things that no one really touches on, but they're the very defining moments that make you or break you. There's a way to do this and be profitable, and it'll feel easy. It ain't easy because you have to go through a lot of stuff to figure yourself out and then what model fits you. But when you get to that point, it's easy to make money doing this. You always have risk. That's always there. But it's easier to take the initiative and trade with that underlying risk, because you know you're in a condition or an environment using a model that you trust, that it's conducive for you to find success in it. But in the beginning, when you're brand new, or you're listening to someone that's too new to even know better, you're going to have a whole lot of fear and anxiety and regret doing things like trading in these days. I mean, seriously, folks, look at this chart. I mean, look at that. Does that look like something that you can't live without? Like, you got to be in that? I have to be in that ICT. You don't understand. I love her. I get it. But you'll grow up and you'll understand that she's not the only one for you. Or he, in deference to the ladies. So, anyway, I'm not certain we'll have another one of these before we close in November. But I will do the non-farm payrolls going forward. So that way we can get another